Paul, why don't you introduce yourself and then we can get into more of a conversation.
Awesome. Thanks, Kai, and hi, everybody. Yeah, it's great to be here with everybody, and great to be here with you, Guy. On my background, so as you mentioned, I'm a partner with Sapphire Ventures. We're proud investors in Side, and I'm happy to be on the board supporting Guy. I've been with Sapphire a few years, and prior to that, had a 20-year career as an operator in the Valley with a number of internet companies, E-Trade, Yahoo, and then most recently I was the COO and then president of Trulia. I was not a founder, but I joined maybe 3 or 4 years in. We had about 100 people, and the business was sizable, but still kind of early in our evolution, and spent almost 7 years there. 2 years we were private, and then Trulia had its IPO. We were an independent public company for 2 years, and then Zillow acquired us. I became the president and joined Zillow's leadership team and was responsible for essentially integrating Trulia into Zillow. So, and I think neglected to mention, when I was at Yahoo, I actually briefly had responsibility for Yahoo's real estate business before Trulia and Zillow even launched. So I've been kind of working at the intersection of technology and real estate for almost 15 years now. And yeah, and hopefully that's helpful as a little bit of background.
Perfect.
Oh, and I should also mention I'm broadcasting from Sapphire Ventures global headquarters in my office upstairs, where I've been now 2 months into sheltering in place with my wife, 2 kids, dog, and 2 cats.
Well, Paul, you've been at Sapphire about, 2 years now?
Yes.
And I think it's notable to help our partners in the partner team understand how selective and picky venture capital funds tend to be. You've probably evaluated every single prop tech company that exists.
Yeah.
And I believe to date you've only made 1 real estate related investment, and that's
Yep.
Can you just, before we get into the meat of the topic of the day, speak a little bit to what you have seen in market insofar as other real estate companies, technology, solutions, why it is that you haven't decided to make any other investments, things like that.
Yeah, absolutely. So, venture capital is an interesting business, right? Like a typical partner at a fund will meet probably a couple of 100 companies a year and typically make 1 or 2 investments per year. And so it really is, we spend a lot of time trying to meet a lot of companies and try to really pick the cream of the crop. I'd say for us, the things that get us most excited, really about any company, is one is a big market opportunity, just feeling like there's a big unsolved problem. 2, a team that we really want to back and that we feel like has vision and expertise and passion. And then 3, really an innovative product, like a solution that's meaningful. And so, over the past couple of years, I've met at least 100, possibly 200 companies innovating kind of at that intersection of real estate and technology. And as Guy mentioned, and he always likes to hear this, Side is the one that cleared our bar. And I think what got me excited about Side from the beginning is, from my experience at Trulia, I just saw how strong and powerful leading independent agents are, entrepreneurial agents and agent teams. It really is, relative to brokers and MLSs and all the other players in the market, it really is the strong entrepreneurial agent who kind of makes the market go around. Side was really the only company, or certainly the most exciting company that I found, that really was about identifying what do top entrepreneurial agents want and need, and just 100% focused on delivering that and completely aligned. And so that's what led Sapphire to invest inside, and why I'm so excited about the business.
I do like to hear that a lot because when you start something that is brand new, that most people don't get right away, what you spend most of your time doing is seeking validation. You want, because it's a thin line between having a real vision and having a hallucination, right? Between being very smart and very crazy. Uh, and the first validation, of course, comes from the folks you partner with. It's these like amazing, sophisticated, bright, smart, capable entrepreneurial agents and these teams that say, you know what, this makes so much sense. I'm so glad this exists. It's exactly what I wanted and would have been looking for. And that, you know, fills you up and gives you kind of lots of purpose and makes you feel validated. It makes all the hard work really, really, really worth it. And the second validation is from investors who are, especially when you're building something like ours, which is, you know, high on the R&D scale. We do a lot to innovate and invest in innovation. It's always good to get somebody who really knows what they're doing to validate what you're doing as well. And it's interesting because once Paul made the investment inside, all sorts of investors started coming out of the woodwork like, if Paul Levine likes this company, we really should like this company and we should talk to this company. We've kind of since then have had to, you know, keep them at arm's length because we're not raising any additional money right now. And we're really well capitalized. We're really grateful to be there. So thank you for reiterating that, Paul. Let's get into our discussion for the day.
Yeah.
And let's start by talking about what your overall outlook is for the economy and the housing market right now. This is not like the last time, right? The last time we had a major economic crisis, it was a housing crisis, right? In the 3 years preceding the crisis, average home sales went from 5.5 million a year to 7.5 million a year. So 2 million more people were buying homes than is typical. And that, of course, all resulted in a bubble and a crash because those people couldn't afford those houses or keep up with those mortgage payments. And then we had a period of 4 years where home sales were about 4 million a year before the recovery happened. And now we're back to that historical 5.5 million properties trading hands each and every year on the residential side. So, Paul, what's your overall perspective on what the dynamics of this crisis look like? What's the outlook on the type of economy we could expect coming out of this, and how is it going to affect the housing market?
Yeah, I mean, look, there's no question this is a difficult time for everyone. And I think, you know, you always expect economic cycles to kind of rise and fall. And I think one of the interesting things or sort of defining things about this current situation is it kind of came out of nowhere, right? Like no one expected this crisis to hit us. And it's kind of this double whammy of both the health scare on one hand and combined with the economic impact. So it's really, you know, both of those in play. And I would say, like everyone, I have days where I'm optimistic about the timing of life getting back to normal, and then other days where I feel like, wow, this is just going to last for a long time. You know, as it relates to residential real estate, it's been interesting to watch the market during this time, and I'll be curious to hear from folks on the call because, you know, you folks more than anybody are kind of in the market and really hearing and feeling what's going on with residential real estate. I would say, you know, when the situation first bubbled up back in March, I was concerned that residential real estate would really like lock up entirely and just totally grind to a halt. And in reality, at least what I've seen from the data that I track, there was kind of this immediate 40 or 50% slowdown back in kind of late March, early April. And this is in terms of volume of transactions. But the data that I've seen shows that we've gotten about halfway back to normal. So maybe down kind of 20 or 30% from where we would normally be this time of year in terms of volume, but you know, trending back up. And I think, again, there was sort of like this immediate uncertainty followed by this strong desire for people, I think, to start, getting back to life as normal. So at least that's what I'm seeing from a volume perspective. The other thing that I've heard and seen is that prices haven't really changed that much. Like, my sense is there's still, there was kind of undersupply entering this year and entering COVID. And if anything, there's even more pent-up supply now, which is kind of keeping prices up. So I think just there are a lot of homeowners, potential home sellers, who don't want to put their home on the market. Either they're concerned that they're not going to get the best price, or just don't want people coming into their house while they're sheltering in place. And so my sense is there's, just in terms from an aggregate perspective, number of listings is down, which kind of keeps the prices up. And so I would expect, just in terms of, I don't have a great point of view as to when things get back to normal. I'd be interested in the discussion of that, but it feels like it's months to quarters. I mean, it's not weeks and it's not years, but I think it's kind of months to maybe quarters. And I do think once things do start getting back to normal, whenever that is, I do think you'll see a lot of supply hit the market and you'll start seeing volume pick up. But I think in this period right now where supply is pretty tight, I think you'll still see volume be down a bit.
So, you're a VC, you're in venture capital. So you're in the business of evaluating businesses. And you also at Sapphire have a portfolio, the whole firm does, of roughly 40, fantastic businesses that are all navigating through COVID. I often tell agents that building a good real estate business is the exact same thing as building any business. It's the same type of approach and models and thought processes. And of course, what we help them do is build a business. So question there is, what sort of relevant lessons can you share that you're seeing companies in your own portfolio or companies that are not in the Sapphire portfolio, but that you're evaluating and engaging with? What lessons can you share that of things that they're doing that are proving to be effective in continuing to help them grow and win customers and service their customers?
Yeah. First off, I would agree with you. I think there are a lot of parallels between building a real estate business and building a tech business. And so happy to share kind of what we've been up to and kind of what we've been learning, how we've been helping our portfolio companies. So, I think as we mentioned in the intro, Sapphire Ventures is, we have $4 billion in total capital. We typically invest in tech startups at growth stage, which usually means a company that's been around for 3 to 5 years, has a lot of customers, has hundreds or maybe thousands of employees and some real scale. And just for reference, in addition to Side, we've invested in some great companies like LinkedIn, Square, Fitbit, DocuSign, 23andMe, a lot of kind of internet and software businesses. And we actually currently have, I think, 50 plus portfolio companies that are mostly tech startups. And most of what we've been doing over the last 2 months really has been helping them just kind of adjust to the new reality and replan their business based on COVID. So, what we've been doing basically is we typically start by really understanding what's going on, and this varies company by company, like really understanding what's going on in your market and kind of understanding the new reality, right? Like nobody had COVID on their 2020 business plan. We certainly didn't have it in our, thinking of which companies to invest in and all that. And so it's been a big surprise. And so we've immediately focused on really sort of adjusting to the new reality. So we start kind of immediately with what's going on in your market, like what's going on for your customers and how severely impacted are they? How active will a company's customers be this year? And are their needs the same or have their needs changed? And I would say in just a few cases, COVID has been a net positive for a few of our companies. Like if you're a future of work, we don't have Zoom in our portfolio, but if you had, Zoom in your investment portfolio, then obviously 2020 has been a very good year for Zoom. And certain other kind of like remote work businesses have had a net positive. But I'd say for the vast majority of our portfolio companies, and really, the vast majority of companies in America, things have slowed down a bit. So we kind of first start by just kind of taking stock of what's going on in the market, because ultimately what your customers are feeling is what drives your business. The next thing we do is really take a look at where the companies are investing resources. So this also varies company by company, but typically sales and marketing is a big part of the spend. And then kind of people, human resources, and other resources are kind of where companies are spending as well. And we kind of take a look at what your plan was for 2020 in terms of where you're going to invest, and just think about whether that still makes sense. I'd say generally we've suggested that companies cut the things that were kind of experimental or don't make sense. If it was kind of a little bit of a coin toss on a new initiative and you weren't sure if it was going to work or not, save your capital and save your dollars and time until it's a little bit more of a certain market environment, and don't pull back a little bit from the kind of more experimental stuff. But we've been encouraging our portfolio companies to keep, and wherever they can, really double down on the things that are working well. And often that's marketing spend. I think we'll probably talk about that a little bit, but your marketing spend and your customer acquisition and kind of your acquisition engine can be a place where you can kind of retool your strategy to find new pockets of opportunity. And yeah, I guess I'd say the final thing that we've done with our portfolio companies is just kind of look at where there's new opportunities. And I would say generally these kinds of dislocations that we're going through can create new opportunities. They may shut down some things that you thought were going to work for you, but open up new opportunities, like new needs that customers have that allow you to offer new products or new approaches or ways to grow share and kind of leverage your market position to be even more valuable to your competitors. And I think we'll probably talk about some Trulia stuff as well, and I can maybe share a little bit about that in the Trulia context too.
I think that's a good segue to the next question, but before we go there, obviously when this crisis started to unfold, there was a lot of uncertainty and ambiguity about size and what the market would, how the real estate market would play out, how that would affect us. And I was, of course, cautiously optimistic. We had, for a very long time, believed that our approach and our model was very recession-proof and market shift-proof, or at the very least, insulated, because we work with people who really know what they're doing and are resourceful and professionals, and have proven to be durable through previous cycles and recessions in the past. You now know how side's been performing through this cycle. Has that been a surprise, negative or positive? Like, how are you thinking? I've never asked you this question before.
Yeah.
I was going to ask you at our next board meeting, which is next week, but since we're here in front of...
Nothing like putting me on the spot in front of 125 people, Yeah, no, I've been pleasantly surprised. I mean, first off, I've been, I don't know about surprised, but I've just been really impressed with you, Guy, and the team in terms of how you've handled this situation. I think I knew this already, but it's like these pressure situations are what separates real leaders and people with real vision from folks who sort of crumble under the pressure. And I think you and Ed and Hillary and the whole side team have been immediately focused on what matters to your side partner agents, and immediately focused on just how to be helpful and supportive. And I think that's been awesome. Those numbers I cited about the overall market volume dropping kind of 40 to 50%, and then kind of coming halfway back. I can't remember the numbers off the top of my head, but I know that Side's customer base has fared well better than the average in the market.
Yep.
Which is not a surprise. And I think, again, like I said, part of my thesis in investing in Side, I mean, I saw from the Trulia experience, we had 100,000 agent customers, but it was so clear that the top 5 or 10% that were entrepreneurial and aggressive and highly competent and had built their own, sphere of influence and business, were way stronger and kind of where I wanted to put my bet more so than the average realtor. And so the fact that, you know, you've found this amazingly strong group of partner agents and they found you, I think has, you know, there's no avoiding a little bit of downward pressure just given what's going on overall. But I've been, to answer your question, I've been quite pleasantly surprised with how the side business has been doing. And really it's a testament to the partner agents.
It really is. Yeah, they never cease to amaze me. And they've done it, and they've done that not through, you know, a lot of folks have maintained their advertising spend. Some have shifted it, you know, maybe taken some money out of direct mail because people aren't trying to touch or interact with print so much right now, and maybe put more of that into online leads and paid ads. But they've also shifted more and more of their time to community support. So, you know, raising money for those in need, securing personal protection equipment like masks for local nurses and doctors. We even have partners like Christina McCann, who's influenced a bunch of other side partners like Anthony Margulies in LA and Katie Moe and Jennifer Larson in the East Bay, and even our partner Nicole Lopez over in Houston, to go out and put flamingos in the lawns of homes with the children that are celebrating birthdays in shelter in place. And it's just been feel good and amazing and creative. And maybe that doesn't return right away, but it definitely returns at some point, right? The stuff you put out comes back to you. So let's segue to your time at Trulia, because that's relevant. You joined Trulia during the financial crisis, maybe towards the end of it.
Yep.
I imagine there were a lot of important and interesting lessons that you learned during your years there. I think you were there 7 years.
Yep.
So wondering what practical advice you have for folks on how to help their business navigate this current situation and make sure that they're well positioned for the rebound, because rebounds happen quickly, and then you kind of are either in a position to grab that ball or you weren't in a position at all. Yes.
Yep.
To do so, and then you can't really react. It's too late at that point. So maybe talk a little bit about some bright areas of opportunities for businesses, and what type of things people can do to reinvent themselves to better adapt or better position, and where you would imagine people should be investing marketing dollars right now, if at all. Yep. So I know there was a whole bunch, but I'll let you chew into that.
Yeah, no, that's great. That's great. So so I joined Trulia kind of mid-flight during the last global financial crisis, and actually it's funny, it was a consideration for me in joining Trulia. Like, is this a good time to join? This is, you know, it was kind of a tough market, but I kind of felt like the long-term opportunity there was so significant that it would, you know, cycles come and go, but what Trulia was doing felt kind of significant and meaningful. So I signed on in 2010 during the global financial crisis, and then started in early 2011. And I agree, there's a lot of parallels to now. I would say it definitely was a tough time for Trulia's business, and tough for the agent and broker customer base. I mean, we did some layoffs. We Trulia reduced some of our spend. But the interesting thing to me, though, is that while many agents struggled, our top producers and strong teams fared the best of all, and fared quite well overall. They tended to grow their influence, grow their market share, and while they felt the pressure during the financial crisis, they did emerge even stronger and better positioned and with more market share after than before. So I guess my three suggestions would be based on that Trulia experience. One is, I really would encourage everyone to think like a business owner. I like the way that you positioned it, Guy, and I think a lot of what we're doing, you know, with Sapphire and our portfolio companies, I would kind of almost think about a replan for your real estate business for this year. You know, kind of take stock of what's going on with your customer base, how impacted is your client base in your market, and and think about where you're investing and what your initiatives are, like kind of where you're investing time and resources and dollars and focus, and how much of it still makes sense given the current reality. And I would say, as we encouraged with our portfolio companies, I would say, you may want to consider dropping more experimental initiatives, things that you weren't sure if they were going to work or not. And, in the go-go moment, you might be willing to drop a little bit of extra capital or time to try something that may or may not be new. Now feels a little bit less like a time to try something that's kind of like experimental and costly, and kind of save the resources for a better time and really focus on the core. I would say if you were not
on the try, test, and true stuff. So don't get distracted by the shiny objects, but rather do the things that have always made you successful.
I think so. Yeah. I was going to say, by the way, part of my advice would be, if you weren't already on the side platform, I'd say this would be a great time to make sure that you're lined up with a top brokerage platform where you really feel like there's alignment between your goals and the brokerage that you're working for, because that is, as we all know, that is not always the case. But of course, you guys have all made that move already, so congratulations on that piece. Second thing I would say is really optimizing your marketing mix. I assume just about everybody has some, one or two or three kind of marketing strategies or client acquisition channels that you use over time. And I would always be thinking about how you kind of optimize these channels, but I would say now is a particularly interesting time to do it. In Trulia's business, in the global financial crisis, it actually ended up being a big benefit to to our business overall and to a lot of our customers, because it kind of forced agents to think hard about where they were spending and shift their dollars away from what was not working and towards what was working. And so, remember, this is kind of 2010, 2011. A lot of agents kind of entered the financial crisis spending money on bus stops and supermarket carts and things that kind of felt good, but maybe weren't super trackable and kind of hard to know if it was really working or not, more kind of emotion-based than analytically based. And sort of exited the global financial crisis with a real internet marketing strategy that ended up more effective, spending money on Zillow, on Trulia, on other online platforms. And so I'd say today's analogy for that is, if you're already spending online, I would encourage you to really closely watch what's going on both with spend and with effectiveness right now. From a spend perspective, I know that prices on a lot of the big online platforms, Google, Facebook, Zillow, have dropped pretty significantly in the last couple months. The users are still there. There are a lot of people who are home and, probably spending more time than they used to be on Facebook or on Zillow or Trulia or wherever they are. But a lot of advertisers have pulled out, right? So, Google and Facebook, I think, published that their price per click has dropped, 20 to 30%, I believe. So for that same click, it can be a lot cheaper to get a consumer. I know that Zillow did maybe a 50% discount, I think, for Premier agents. So those kind of online marketing channels, I think, are probably cheaper now than they were 2 or 3 months ago. Now, you got to know that you're getting value from it, right? So I would measure the value, but I would probably give yourself a little bit of a longer lead time to have those leads turn into new business, and just consider about where you're spending money. And I think one of the things that we saw, again, at Trulia is, in these tough times, a lot of the smaller and kind of undercapitalized players tend to struggle and kind of pull out of the market, which I think leaves room for stronger players like you to be more aggressive and gain share. So again, I would always be thinking about what you're getting for the dollars that you spend, but I wouldn't assume just because the market has slowed down a little bit that it's time to pull back. In a way, it actually could be a time to push more chips and get more effectiveness out of your marketing spend.
I know you have one more thing you want to share there.
Yeah, no, go for it.
actually seen a lot of partners take advantage of the reduced cost of online advertising, specifically on Zillow.
Yeah.
And Zillow's likely regretting that decision. I know in lots of cases they've tried to not honor the 50% discount and they
Yeah.
30% discount. And I think it's because things haven't been as bad as they thought they would be. And a lot of our partners are closing those leads and they are putting away commissions that are going to finance their advertising efforts for the next year.
Yeah.
At a time when there's less noise, which means there's more signal. So that person who's contacting you from Zillow is way less likely to be a person who's just trying to go see some houses for fun,
Yep.
because the stakes for doing that are much higher.
Yep.
But now they have so much more intent to actually transact. So you can reliably spend time with them knowing you're working with somebody highly qualified with high intent. So it's kind of somewhat counterintuitive, but to your point, it's making a difference and it's working really well. And I suspect that will continue being an opportunity for maybe another month or two before that window starts to close.
Yeah, I would agree. It's, another just example from the Sapphire portfolio. We're investors in a company called Sunbasket, which is a
Yep.
healthy meal kit delivery, kind of in the same general space as Blue Apron and so on. And they've historically been big advertisers, online advertisers overall, on Facebook and so on. And they've seen prices drop and response rates increase because the prices have dropped because a lot of Facebook advertisers have kind of pulled back on their spend. And their conversion rates have increased because people are quite interested in meal kit delivery in the current situation. So sometimes those things can break in a positive way. And again, these dislocations sometimes can create opportunities. And then just to your question from the Trulia experience, the last thing I was going to say, and you sort of mentioned it, but I think it's like these can be times where agents and really any business can sort of be influential in their community and really build their brand and build their sphere of influence. And so this is, this is a time when a lot of people are struggling and kind of feeling uncertain about the current environment, uncertain as to whether now is a good time to buy or sell a home, uncertain as to how it would even work if they were going to list their home for sale. And so I think, whether it's posting updates about the market, offering, suggestions and sort of consultation about how to successfully buy and sell in today's environment, just doing nice things for your clients, like the flamingo example that you mentioned, Guy, or doing charitable work. I think it's, now can just be a great time to really share your wisdom and help others. And it's, that's not only good for the community, but of course good for your local brand as well.
So do you think this changes consumer behavior? And then if so, how? And does that benefit top producing agents? What sort of trends does this set in motion that people should be anticipating or aware of?
Yeah, I would say like the biggest thing that I'm seeing, and I'm just experiencing it in my own life, and I'm probably spending 6 or 8 hours a day on Zoom these days, which is, I'm getting a little bit of Zoom fatigue.
Yes.
Stuff like this energizes me, but it's like meeting after meeting after meeting on Zoom, I think can be a lot. But I'd say just overall, the biggest trend that I see is that people are getting more and more comfortable doing business without being face-to-face. It's funny, in my 20 years of working in the Valley, I was always an in the office guy. People at Trulia wanted to work from home, and I was kind of the old school curmudgeon who expected people to be in the office and didn't want people to work from home. And even at Sapphire, we have a pretty much, like an in the office culture. But I'm finding through this experience that people can be really effective working from home and using Zoom and Slack and other communication tools. And I think that's relevant to the process of buying and selling a home. I'm just hearing that there's some similar trends in terms of use of technology to communicate in buying and selling home. As an example, my neighbor is in process of listing his home for sale. And I was just chatting with him over the fence the other day, and he was saying he's not going to have open homes, but his realtor is encouraging is basically going to be like virtual walkthroughs with buyer clients and buyer agents via FaceTime. And I think, pre-COVID, that would have been a weird and funky thing. But I think in today's environment, people seem to be more comfortable with these kinds of interactions. So I think it's, using technology to, technology has always been a tool, right? And so like, how do you use it in a way that uses your time more efficiently, uses your client's time more efficiently, helps them feel comfortable? I think you'll see a lot more of that.
Yeah, I do think that whereas before someone would look at taking a day on a weekend to go look at nice, fun houses as entertainment value, that's not something that people will be doing as often anymore. So that should allow agents to now have more capacity to work with more clients in a more serious and intent-driven type of way, at least in my humble opinion.
Yeah. Hey, I know you have time. I don't know when you want to kind of move to questions from the audience, but
I think now would be the time.
Happy to do that now. See if there's questions that are top of mind, or
let's look at
whatever you
Q&A really quickly.
I know you got some already from the audience before the call too, I think.
We did, so maybe we should start there real quick. So here's the first question we got that we thought was important. The properties that plan to hit the market after shelter in place, does that cause a shift? Like, does that create a buyer's market because all of a sudden you have that much more inventory available? What are your thoughts on that?
Yeah, I mean, it's interesting. It maybe, but it doesn't seem to be the case right now. I mean, I think, as I mentioned earlier, we entered the year under supply. I think in January we had kind of the least, fewest number of months of inventory available in many, many years, if not forever. And now my sense is that supply is even tighter for those reasons that I mentioned before. Homeowners are a little hesitant to list because they're not sure about the price they'll get, might not want to have people in their house while they're sheltering in place. So I think that's why, even though you're seeing lower volume, my sense is that prices are still, as homes are transacting, they're still kind of at the same price. So I think post-COVID, I think you will see more supply come on the market and maybe see prices drop a bit or get more normalized. But I think we've got a way. I mean, if January was any indication, we've got a ways to go before things flip to a buyer's market.
Another question that came in, and we had several people asking this, was, what do you see as the impact? This is more for our industry-minded friends, as the impact of this crisis on the brokerage industry and business as a whole. Does that create new opportunities? What might lay ahead? Is the rate of agents making changes increasing or decreasing? How should we think about that?
Yeah. I mean, I guess from a macro perspective, my point of view is that I feel like the traditional real estate brokerage model has been under a lot of pressure for many years. I don't know, maybe for decades. I mean, if you think about it, most traditional brokerages were built in the pre-internet, pre-mobile era. And, what mattered back then was kind of like the fact that their physical, the brand that they had on the big sign in front of their office, and the fact that the physical location captured foot traffic, and consumers didn't have the internet to find listings. So it's just a very different, I think when a lot of the major brands and brokerage businesses were built, it was kind of like a different era. And then in the last 10 years, you've really seen this powerful trend of top producing agent teams gaining a lot of share. I think in a lot of cases, the best and most competent agents in any brokerage end up filling the void left by the brokers who haven't really been able to meet the needs of entrepreneurial agents and teams who really want to build their own business. And so I think brokerage has been struggling for quite a while. A traditional brokerage has been struggling for quite a while. And I don't see it getting any better from here. Like, I think that's partly driven by COVID, and I think it's partly mostly just driven by these trends that have been underway for a long time. And it actually, we at Sapphire do a fair amount of work in financial services, like fintech. And I think a lot of what you've seen in the banking industry over the last 10 or 20 years, I think you're kind of seeing in, and will see in real estate brokerage as well, right? Like brands like Wells Fargo and Chase, which to me are kind of like the Remax or Coldwell Banker of real estate.
Yes.
Those businesses were built up in a different era, and it was all about ATMs and where your office was located and how nice your lobby was and how many tellers you had. And like in today's era, those things just don't matter. For today's consumer, those things don't matter that much. What really matters is your mobile app great? When things don't work out, is there quick and immediate support? And so I think, in a way, I almost think of Sign's business as kind of a neo broker relative to some of these traditional brokerage models, the same way a Chime or other kind of neo banks are relative to traditional brokers. So I think it's a long answer to a short question, but I think I think the trends that are underway, I think you'll continue to see accelerate.
Now, Paul, I think maybe we go to audience questions. I know you wanted to touch on kind of the four trends that you talked about at our last forum and how that's playing out. But do you want to do that, or do you want to take, because we only have about 10 minutes left.
Yeah, why don't we see, I was going to talk a little bit, I shared a bunch of that at the forum in January, so I don't know that we necessarily need to go through that unless, if there are questions, let's do questions, and if not, we can maybe talk about some of those other trends as well.
I think we have a couple of questions, so let's do that now. I'll start with Terrell. Terrell's our partner in Sunnyvale. This is a long one. I'm not sure it's exactly a question, but let's read this. So for those of you who have been on the fence about whether to hit the pause button on farming, which is direct mail advertising, I wanted to share my experience. I sent out my very first and only mailer that site produced in early March. We then went on lockdown. I was debating whether or not to stop it, but then someone reached out to me about selling their $2.2 million home. And that mailer cost me $5,000, and I'm going to be selling that house. So that's a $50,000 paycheck, and that pays for effectively a year of farming. So I think what Terrell is saying here is just double clicking on some of our advice from before, which is there are opportunities, and play the long game. Farming is certainly that. You won't necessarily get results right away, but eventually they will be there. Marcus Miller, who's with Helm in San Francisco, asks, what do you see as opportunities or threats for our business in this year?
Yeah, I guess I would say for your business, meaning
for agent business.
Yeah, for his, yeah. I think I would say the biggest threat really, I don't know if it's a threat. I feel like it's maybe just the risk of kind of the macro situation, right? Like, I think my life philosophy always is don't try to control the things you can't control and just focus on the things that you can control. But certainly there's this kind of uncontrollable existential risk related to COVID that I hope is not as bad as the worst case scenarios. But certainly if shelter in place lasts longer than is expected, or if the economic fallout of all the unemployment and layoffs and all that is worse than we expect, I think that definitely could put downward pressure on your business. That to me is the biggest risk. But as I said earlier, I think the biggest opportunity is it's in tough situations like this where the strong survive and the strong thrive. And so I think I say you, collectively, the side partner agent base, many of whom I've met and many of whom I knew even prior to joining the side board. You guys have strong personal brands. You're highly competent. You have reputations that stand for themselves in your market. You have a lot of wisdom and expertise to impart. You often have the capital to kind of fund growth when other you know, think about it. So that advice that I was sharing about staying the course on investing in Facebook or Zillow or farming or, I don't know, TikTok. I'm still waiting for the next TikTok realtor. I know that the usage growth on TikTok has been incredibly explosive. So if anyone's a good dancer out there, that might be a way to build some brand.
We have a few partners that have been kicking some serious butt on TikTok.
Nice. I'm still waiting to subscribe to Guy's TikTok channel. When is that coming?
That's going to happen never.
So, so I was going to say the advice I had about, you know, leaning in on growth and marketing. I mean, you have to measure what you're doing, and I love that story from Terrell about investing 5K to make 50. I mean, that's the concept. But you know, the agent who closes 1 or 2 deals a year and is still kind of feeding her or his family on the last deal that she did back in October probably doesn't have a lot of money to invest on online advertising and customer acquisition. Whereas side partner agents who tend to just have much more durable businesses, I think this can be a time to really press your advantage. So that to me is the opportunity, is to really press your strong position in the market to grow even more share.
So I will say, you know, it's natural to be concerned and uncertain and fearful during times like this. It's also natural for a deer to freeze in the headlights of an oncoming car. But the key then becomes what you do next. Do you continue standing still, or do you rationalize, normalize, and then think about what your best opportunity is? So if you're that deer, you don't want to take too long thinking. You want to make some decisions and get out of the way of the car. And then, of course, find yourself in a much better position to thrive and continue to grow. So that's good advice. We'll take 2 more questions that have come in, and that'll be that for today's time. So, and maybe a third if we can get to it. So Alex Wang, who's our partner in Palo Alto and Los Altos with Rainmaker, asks or says, platforms like Zillow, Realtor, Trulia are traditionally focused on generating traffic, getting eyeballs, and then getting agents, regardless of experience, to compete for those leads. And we see Yelp doing the same thing now with sponsored ads prior to viewing the organic search results, as well as allowing consumers to message multiple agents at one time to inquire about their service. This leads to a race to the bottom with no real guarantee of the caliber of agent that's advertising on the platform. Do you think there's a new or different way for a platform to monetize on real estate agents and real estate agent leads? And Paul, I know you're still very familiar with Zillow. Maybe you can talk about how they're changing their model a bit to react to some of the criticism, the fair criticism that Alex is sharing here.
Yeah, no, it's definitely fair criticism, and it's, you know, I've been out of the Trulia and Zillow business for 2 years now, so it's, you know, this is maybe slightly dated, but even back then, I think we were hearing this same feedback, which is, you know, we had a kind of an open platform where we had tens of thousands of realtors, and we definitely did a lot of work back then to understand agent reputation, and our algorithm was sort of a combination of, you know, willingness to pay, but also your reputation as an agent, the agent ratings and so on. But I will say in the last couple of years, my understanding is that Zillow has evolved that even further. And I think gone for fewer agent partners on the network, raised the bar over time, moved out a lot of agents who were not as qualified, and are trying to concentrate more of the lead volume to agents who do provide excellent service and are the best in their market. And I'm sure many of you are familiar with a program called Flex that Zillow's been, I think, testing in a few markets. And I don't know what the latest is on the rollout of Flex, but basically the idea is to move to a % referral fee instead of a monthly subscription fee. And that has the dual benefit of A, you're only paying if you, you know, if you close business, and B, you're paying at the end on a performance basis rather than upfront. I know some agents who are really good at closing Zillow leads probably feel like they'll end up spending more in this scenario than they were previously.
Yes.
So there's, it's not a perfect solution by any stretch, but I think it is moving towards what Alex was getting at, which is, in that flex model, I think it almost doesn't matter how many agents are buying leads in a given market. It really is about placing those leads to the highest quality realtors who have the highest likelihood of closing business. So I think you'll see that the market evolve in that direction. I know HomeLight is a platform that I think has a similar model where it's a percent fee. So I think you'll generally see the market evolve in that direction.
All right, thank you. I think we have time for one last question. So Jason Seawald, I apologize. Menlo Park with Ovation, we won't be able to get to your question because we'll take Sandra Gandolfo with Barbco here in San Francisco. So Sandra says, you started talking about what some top producers did after the financial crisis.
Yeah.
Can you throw out a few more marketing ideas or efforts that you observed to be effective? And I'll ask Jason's question as well. You can see if you could address it.
Yeah.
Is financial help to do improvements to a seller's home for sale still on the radar? Oh, that's a side related question. So Jason, yes, that is. We'll discuss that separately. But let's talk about Sandra's question, which was, what else should you be thinking about from a marketing strategy perspective in reference to what you've seen before?
Yeah, I'd say the two biggest things that I saw coming out of the financial crisis were, one is just the rise of the savvy real estate marketer. I mean, that was always there, but I think people, like I said, were doing a lot of focus on brand building and sort of traditional means, farming, which I know is quite, and direct mail, which I know is still continues to be quite effective. But I'd say one big thrust was just agents who really leaned into online marketing. And I think the benefit of online marketing was, at least in theory, you're sort of attracting bottom of the funnel, kind of like really warm consumers. It's quite scalable. So if you find stuff that starts to work, you can push more money into it. And then third, it's quite measurable. So you can actually see, who's responding to your marketing campaigns and your click rates and your response rates and whatever. So one sort of broad set of tactics was around aggressive marketing. And then I'd say the other, major trend that was well underway, but I think really accelerated coming out of the global financial crisis was the rise of agent teams. Yeah. So that's been going on for a long time, but I think it was, I think what you saw coming out of GFC and just generally coming out of any kind of crisis is you've got haves and have-nots. And the haves were folks who were sophisticated, good marketers and good at acquiring and servicing clients, good and organized in building teams, had the capital to build teams. And so a lot of those folks moved from, maybe it was kind of like one agent with an assistant, to adding 2 or 3 associate agents onto the team and just, built their business. So again, I think it's my kind of overall perspective or suggestion is these dislocations kind of like shake the market and shake a lot of sort of lower performers out of the market, but make room for top performers to really rise up through marketing, through building your team, through investing in the right things. That would be my overall takeaway.
Okay. So thank you so much, Paul, for your time today and all of your experience and insight. If anyone had questions that weren't addressed or come up, you can always email community@side and we will address those with you directly. As you know, we do Ask Me Anythings every single week, and there'll be one again next week on Tuesday at 2:30 p.m. In that Pacific time, which is 4:30 p.m. Central, with Rob Hahn, who Paul knows. Yeah, Rob is another big real estate brain who really knows the ins and outs of the industry. And he'll be talking to us about his perspective on the market and what he's seeing other people do and how he thinks you can respond to what's happening in a way that's productive and successful. So we will have an on-demand recording of this event available on the same link in immediately after this call. And we will, of course, share that with you by email. But in the meantime, thank you for tuning in. Have a great weekend. Thank you, Paul, again. I'm sure everyone's giving you a round of applause right now. You just can't hear it. So I'll simulate.
Great to talk to you all. I hope you thrive through this challenge and you're all healthy and safe.
Bye, everyone. Thank you.